Hey, good afternoon, everyone. We're going to be starting. I'm just going to give it 30 more seconds. It's a minute after one. A lot of traders are coming into the room, so let me give them 30 more seconds, and then we're going to begin. Okay, well, listen, we're ready to go. Um, if you can I just want to do a sound check and a visual. If you can see the charts and you can hear me, if you could put a yes in, I'd really appreciate it. Okay, great. Hey, Rianne, how you doing? Okay, terrific. Now, what we're going to be talking about today is a system we call the institutional edge trading system. And I'm Mark Sachs, and I'm the CEO and founder of Right Line Trading. Now, just quickly, this mandatory disclosure that all signals and trading opportunities provided both orally, written, or electronically are for education and demonstration purposes only. The company takes no responsibility for any profits or losses that may be incurred when you trade. I know that everyone understands that trading is risky and that you can lose a substantial amount of money. Our hope is that you're going to make a substantial amount of money, but it's obviously a risky endeavor. Always carefully consider your financial position prior to making a trade. And really, the dictum is you should never risk more than you can afford to lose. Those of us here at Right Line Trading are not registered financial advisors, and we are not licensed commodity trading advisors. Now, there are a ton of crazy, in my opinion, at this point, lunatics on social media providing you with the most gimmicky systems and all sorts of crazy, bizarre schemes to try to take your money, and it's really, really very unfortunate. I don't want to open the talk like this, but I watched one last night where supposedly at 4:01 p.m. Eastern time, or at the close of the market, is going to tell some kind of software they built the 5 stocks to trade the following week. It's going to give you the stock's high, the low, the volatility, the whole deal. Now, it's just not possible mathematically, but that was what was offered. I listened to it a whole hour of that webinar, and I really want to distinguish myself from all these gimmicks and what I consider to be nonsense. And I want to do it with my resume. I graduated from an Ivy League university. I went to the University of Pennsylvania for 8 years. When I graduated, I was inducted into the Phi Beta Kappa Honor Society, which meant I graduated in the top 2% of my class. I majored in mathematics, and within the field of mathematics, I focused on mathematical modeling. When I graduated, I became a full-time professor at Thomas Jefferson University in Philadelphia. I published 15 peer-reviewed articles and many of them can still be Googled. If you put in Sachs, MK, into Google, they'll come up. I consider myself to be a scientist, a teacher, and an academician. I taught undergraduate students and graduate students, which was really, was a lot of fun, very, very challenging. They ask tough questions, and if you don't give them an A, they come to your office and filibuster and jump up and down and scream at you. And I even had one go to her congressman, but it was still, I love the job, and I had to leave for personal reasons because of my children. I've mentored more than 30,000 traders, and I've spoken internationally in many countries. Last place I went was the Philippines, end of March, first week in April of last year. Actually, this year, I got out right before really COVID really struck hard, which was only 3 weeks later. Now, if you're here today, it's very likely that you have a problem trading. And most people who try to trade do have a problem. And the reason is because they're trading a flawed methodology, a flawed system, flawed software. They make money some days and they're followed up by bad days. But what they cannot gain is consistency. And without consistency, you're never going to get where you want to go. You may have blown one to several trading accounts. Back in 2004, I blew an enormous trading account. You may have purchased expensive software in the past that, despite promises, does not work. In 2004, I bought a software package for $15,000. The company is still around today, still offering its software. It absolutely does not work. It's been selling it now for 20 years. It is super expensive. I could not pay by Visa, MasterCard, or even by check. I had to wire the company the money. And when my account continued to shrink, I asked them questions, asked them what was going on, and the answer was it was always my fault. I mean, I just didn't know what I was doing. And 2004 is when I realized that the only way that I was going to be able to trade profitably was to really put aside the trade methodologies that have been busting out traders from the market for the past 50 or 60 years and create my own software. We now have close to 500 traders in the live trading room, and we make money almost every day. This week we made money every single day. Now today I couldn't trade. Had something come up this morning and I just couldn't make the trading room. But we made money 4 days in a row. We were up about between $1,200 and $1,300. We only trade a small amounts of contracts in the room, and what we look for is consistency. Yesterday I took one trade and made $545 on one trade. Now, if you stay to the end of this 15-minute presentation, you're going to really get a tremendous amount of bonus software. You're going to get a huge special discount, and you're going to get a special secret bonus. And I'm going to tell you what that is, so you're not sitting on the edge of your chair. It's an ebook I wrote, and if you've been in one of my webinars before, you already have it. But if not, it's a really good ebook. It's 20 pages. I spent a lot of time on it. I had it professionally done. It's really, really a great ebook. And it's really focuses on looking at stocks, finding an option, and learning how to best configure it so your risk to reward is tilted way in your favor. So it's great information, and it's not a throwaway. Now, let's just talk about the market briefly. If we go back 50 or 60 years, maybe 70 years, way before any of us were around, at least trading for sure, the market consisted of nothing but small retail traders. And all of us had equal power and equal throw weight. And we all had an equal say as to the direction that the market was going to go. And if you go back 400 years, you have the Japanese rice traders who created Japanese candlestick patterns. Now, these patterns were really very brilliant when they created them. And they created them in an era like the one I just showed you. And to take it very specifically, if you have a transaction, let's say you have 100 kilos of rice, and you have 100 buyers on one side and 100 sellers on the other, the premise that they made was all of the participants in the transaction, whether they were on the buying side or the selling side, all had equal throw weight. No single trader had any more power than any other. And they created Japanese candlestick patterns to tell them who was in control of the market at any given time. The buyers or the sellers, the bulls or the bears. And it's really an amazingly elegant system. If you read Steve Nissen's books, you know that there's just a myriad of patterns. There's shooting stars, and there's I think there's 3 black crows and 3 white something. I mean, some of the more esoteric patterns I just don't recall. But here's the bottom line. In a market that's dominated by big institutional money, and which is what we're going to talk about, trading pure price action is never going to make you money off the right edge of the chart. The market doesn't consist anymore of a bunch of small retail traders, all with equal power and all with equal say. And that's why trading pure price action is going to be the surest way I can think of to just walk you right off the cliff of the other 95 to 98% of day traders and swing traders who have preceded you and also gone off the cliff. I mean, at the bottom of that cliff, it is a pile of traders so high, it's about 25 miles high, because they've been going off that cliff for the last 50 years and have done nothing about it. So here's the way the market is now. What we have is a bunch of small retail traders, and then we have this one big institutional guy. And this guy is the only entity that matters. And to be politically correct, I won't call it a guy. I'll call it a guy or a girl or a gal. And but this entity controls price. We as small retail traders really have almost no say in the direction that price is going to go. So if we try, like I said, if we try to trade Japanese candlestick patterns and use that to give us any additional information off the right edge of the chart, we're going to get blown up consistently. We're going to get winners, but we're going to pull in tons of losers. This is the force that moves price in every single market. Now, in this webinar, we're focusing on the platform that we've configured to trade stocks, and it does it really remarkably well. And I'm going to show you that. And when the big institutions come in on small cap, mid cap, or large cap stocks, they're going to control the direction that stock is going to move. And if we as small retail traders don't ride their coattails or grab hold of their belt loops and move in the same direction, we're going to get stopped out. Now, I just wanted to exemplify this point because I think it's so important that here's the sentiment. The stock we're looking at is irrelevant. Small retail traders are in control, and what we, for the most part, in the time we're trading in now, is the only thing that we have the power to do is create chop. We fight back and forth. We each have equal say, and the market really doesn't go anywhere. Then big institutional money comes in And where does this money come from? It could come from a big bank, Bank of America, it could be overseas, HSBC or Deutsche Bank. It could be a mutual fund, it could be a hedge fund, it could be a 401k plan, it could be Wall Street, JP Morgan or Goldman Sachs. Any institution that has the ability to leverage an enormous amount of money, press a button on a computer, generate an algorithmic trade, pour money into a stock and have it rise, or pull money out of the stock and have it fall, is going to be the type of force that we have to track, or we are absolutely going to get run over. The key really here is that if our trading doesn't evolve to meet the market environment that we face today, we're going to wind up going off the cliff, just like in all the traders that have preceded us. There's just a very select few traders that trade consistently profitable almost every single day. And those are the traders that have cast aside 99% of what's been out there for the last 50 or 60 years. And that's what we're going to be doing. Now let's take a falling triangle pattern, and remember that every single pattern has equal power. A falling triangle, rising triangle, a channel, which is different than consolidation, a J-hook pattern, and I'm sure there are lots of other patterns that people have invented, and you've got these gurus always pulling back the curtain on their proprietary trading pattern that's made them 15 million bucks while they were in the closet, and now they're selling it to you. They'll never take a live trade in front of you ever, but they'll sell you their system that's made them rich. But because every pattern is created by us as small retail traders, these sequential lower highs and then the anticipation of a bearish trend continuation is all based on the sentiment of us, the small retail trader. We create the falling triangle, the rising triangle, the J-hook, all of those. Now, and we've all heard of the bear trap and the bull trap. These are all things that the institutions lay to trap us in the wrong direction. And I'll show you what the institutions do. Now, a falling triangle pattern will work sometimes and will fail often. And we cannot make a risk assessment. Is what's the likelihood that if you take a breakout of this falling triangle, this is going to continue to the downside? We have no idea. If we're trading a falling triangle on Roku, does it have any greater power than trading a falling triangle, say, on advanced micro devices? That's the problem with it. We have to assume that every single falling triangle has equal power, and there's no way to differentiate between a falling triangle that has a higher probability of working versus lower probability. Just not possible, inherent in the pattern itself. Now, what the institutions like to do, and it would have been a little bit easier and exemplify what I'm talking about better if I let price break to the downside. We know a ton of retail traders would chase price to the downside. And what is going to happen is that big institutions are going to come in and they're going to pull price to the upside. Now, traders come to me all the time and they say, you know, as soon as I go short, the market goes against me. And they ask me, you know, is somebody watching what they're doing? I mean, sometimes it almost seems uncanny how as soon as you walk into a trade, the trade goes right against you. And the reason that is because big institutions watch the market, and they watch the instance where they can catch us, small retail traders. And remember, there are tens of thousands of us out there. catch us in the wrong direction, and then run us over. And in the process of running us over, they help propel the market in the direction that they want it to go. Every time that a short trader has to buy back their shares, it's going to help push this price further and further to the upside. So they watch exactly what we're doing. And if they see a descending triangle pattern and a breakout, that's where they're most likely to kick in an algorithmic trade to the upside and run us all over. So they do watch what we're doing, and they do try to capitalize on every mistake that we make. Now, just quickly on Fibonacci. Fibonacci was a 13th century mathematician who created Fibonacci transformations. He was a brilliant mathematician, but maybe 50 or 60 or 70 years ago, I don't know, because I wasn't trading the markets. I wasn't alive either. Fibonacci retracements and extensions somehow magically told us something about market sentiment, about the sentiment of small retail traders. Whether it did or it didn't is irrelevant at this point, because the big institutions couldn't care less about Fibonacci retracements or extensions. If they decide to take a trade long, they're going to cut through these levels like they don't even exist. Now, the system that I bought was based on Fibonacci, and Fibonacci is one of the, I think, has sucked more money out of people's pockets and will continue to do so than almost any other single indicator, because it just has an allure to it. Because people, I don't know, there's a sexiness to it. When you know one of these internet gurus pops up with a new program, a lot of times, even though they don't tell you, the underlying mechanics behind it is Fibonacci. Off the right edge of the chart, it has little to no predictive value. Sometimes it'll work and sometimes it won't work. And those are the kind of things we have to avoid like the plague. Now, if we go over everything, and this is sort of the prelude to the system: price action, price patterns, Fibonacci, and quickly Elliott and Gann both created mathematical formulas to try to predict the sentiment of small retail traders like us. They're both very, very brilliant theories. I've read a lot of books on Elliott Wave, a lot of books on Gann. His mathematics is a lot more complex than Elliott, but either way, institutions don't care about this. They're going to run right through these patterns, and they're just irrelevant in today's market. Divergent signals is the last one, and maybe the most important, because divergent signals is all about calling a top or calling a bottom. Now, you are constantly being taught that you can learn, how to call a top or how to call a bottom. I have a spam email where I sign up for everything. I get about 250 emails every 24 hours. And a lot of them say the right way to call tops and bottoms. They're trying to teach you how to call a top, how to call a bottom. Well, let me tell you, that's just not going to happen, because the tops and the bottoms are created by by the big institutions. And you and I both know that a market can be overbought or oversold, not just for minutes or hours, but for days, weeks, and months. And it's going to run over multiple divergent signals. There's no mathematical way of determining a top or a bottom when the force that creates them cannot in any way be harnessed and used as a variable in the equation that we calculate to determine the direction of price. It's an unknown force. So we're never going to call a top, we're never going to call a bottom, We're never going to decide the market's gone too far up and it's just going to fall, or too far down and it's going to rise. We do have that power of retracement to the mean, where the further away price moves from the mean price, you define mean price. Could be the 50 SMA, the 100 SMA, the 200 SMA. I mean, the mean price that you want is up to you. And price is always going to retrace to that mean. But we can never determine when that's going to happen. That's going to happen when the big institutional traders step aside, and we don't know when they are. So forget bottom calling and top calling ever again. In 20 years, I've tried to do it. And I see now that there's just no way that that can be done. So sort of to recap, when this big hand comes down and grabs this candle and pulls it up with big money, small cap, mid cap, or large cap, that stock is going up. All the things we talked about before are irrelevant. When that big hand decides it wants to push this candle down and pulls money out of that market is falling. Doesn't matter what the stock is, it's going down. And this is the only thing that we can do to be consistently profitable, is to track the direction of big money. And if we can do that and trade with the big institutional guys, we can consistently create profit for ourselves. Now, we know that every day we get sector rotation when risk is on, and obviously today risk is off. I have my ticker in front of me off my phone app, and the last time I looked, the market was really coming down hard. And I don't know where it is now, but it's risk is off. The Dow's down 49, the S&P's down 22, the Nasdaq's down 105. For the most part, big institutions are rotating their money out of stocks. So when risk is off, where are they putting their money? They're rotating it into safer investment vehicles. Right now, they're going to protect it. They're going to put it into treasury notes, treasury bonds. They're going to put it into precious metals, certain currencies. And now the new sector is cryptocurrencies. Look what's going on with Bitcoin. I mean, Bitcoin is going through the roof. And that's because investors are looking upon it as a safer investment vehicle when there's risk. And as an aside, I've read an enormous amount of information about which is a better way to, a better way to protect your money, Bitcoin or gold. And I mean, there's the jury is out as far as I'm concerned, and it's going to become Bitcoin. I ultimately think Bitcoin is going to replace gold as that safe sector. It may not replace silver, because silver has a significant amount of industrial use. Gold has almost no industrial use. We've just picked it as this magical entity that has value. But remember, and this is really kind of an aside from the webinar, a lot of fintech companies like PayPal and Square are now taking Bitcoin. You can pay for your transactions with it. It's going to become a really strong sector. And that's when they say Bitcoin $100,000, it's a possibility. But our software tracks this sector rotation using our proprietary technology. We want to know if money is going into stocks or it's going somewhere else. And that's the key to trading. Now, we look at three key metrics that determine money flow. The first is the assessment of our correlative markets. The second is the assessment of Laguerre momentum. And the third is the assessment of order flow. Now, I'm going to go over these fairly quickly. Now, order flow. Now, here's really the core methodology which makes our analysis, I think, so powerful. We use what's called the triple screen method of data analysis. Now, we never assess data from our trading chart. If you have a bunch of indicators sitting underneath your chart that are using data that's coming off your trading chart, it has no future predictive value whatsoever. And it's never going to provide you with any information of any value. I don't care if you have 25 indicators down there. They just don't have any future predictive value. You've got to look at indicators on the higher multiple charts. Now, this was delineated in 1997. I first read about it in a book called Trading for a Living by Alexander Elder, which is still around. It's on Amazon. It just went into a new printing. And how many books that are at least 23 years old on trading are still fresh enough to go into a new edition? It's in like its 24th printing. So you know that the information in it is very relevant. So what Alexander Elder did was say, you don't look at anything on your trading chart. You look at the two higher multiple charts. Now, if you're trading time, and let's say you're trading a 2-minute candle, you're going to multiply the 2 by 3 to get a 6-minute, and the 6 by 3 to get an 18-minute. Those are the charts where we're going to gather all our data on all the analysis we do. If we include the 2-minute, it destroys the independent value of this analysis. Nothing from our trading chart can be looked at to determine the future direction of price. If you're trading a 377 tick, we look at the two higher multiple tick charts, the 610, the 987. If you're not trading a fib, you're going to default to the closest fib, and then we'll take the two higher fibs. Now, Fibonacci doesn't predict market sentiment, but it certainly has a tremendous amount of symmetry in nature. And in mathematics, fib numbers have a significant amount of power, and we harness that. If you're trading a 5 range, we're going to look at the 8 and 13 range. Again, default to the closest fib and take the two higher range. Renko, same thing. Now, if you're trading Unirenko, which I don't recommend on stocks, we're going to have to give you the settings. I mean, stocks for me is best traded on a minute. There's nothing wrong though with trading it on range or trading it on tick. This is just my predisposition, but it's certainly not written in gold and not part of this. The recommendation to the system. Any one of these will work. Now, on the triple screen assessment of order flow, here's what we have to do. Just quickly define what order flow is. I mean, there's a little bit of nomenclature associated with it. And at each cent level, there are buyers and sellers on the dome. Some of them are serious, some of them aren't serious. Some of them are put there by the institutions and then removed. But they're equal on both the bid-ask side. And what this number is the market delta number. It sums up all the traders sitting at the bid, sitting at the ask, and tells us, are there more buyers or more sellers? If there's 1,812 more buyers, the anticipation is this is going to close to the upside. If there are 2,955 more buyers in this candle, doesn't have to be a candle. It can be an open, high, low close. It can be any formation, but it's going to have a length and span a certain price range, and that's where it's going to look at the numbers at the bid and the numbers at the ask. Now, here's the problem: you have a positive 222 and a down candle, and it brings up 2 points. The one which is true for every indicator. No indicator on your trading chart. If this was the right edge of the chart and you predicted this candle was going to rise because of this positive delta, you could potentially have been stopped out. It doesn't have any future predictive value. The second is that market delta, less than 2 standard deviations of the time, simply gives you an errant value. And here's the reason why. Even though there are more buyers here, the sellers are simply overly aggressive. Let's say this is a stock trading at 50 bucks. And for the moment, let's put the bid ask aside. The buyers, which are more plentiful than sellers, are willing to buy it for $50 and a penny. But the sellers are willing to sell it for $50.99, 98, I'm sorry, 49, 99, 98, 97, maybe even 96. They're so aggressive and so sure that this stock is going to fall that their aggressiveness overpowers the fact that the buyers are more plentiful. So we have to overcome both of those flaws in this indicator. One's inherent in every indicator on your trading chart. The other is a flaw in order flow itself that occurs rarely. So what we do is we look at the delta on the two higher multiple charts. We completely ignore the trading chart, and we create a 15-period simple moving average. And it's populated by the last 15 market deltas on those two higher multiple charts. So if you occasionally get an outlying value or a market delta that closes that creates a number in which the candle closes in the opposite direction, it's factored out, because what determines who's in control of the market as far as the bulls or the bears are concerned are the average of the last 15 market deltas. So that one outlier, which is going to occur less than 1 in 20 times, simply becomes irrelevant. And when both 15-period SMAs are sloping up, you've got tremendous buying pressure. And only institutional money can create this, and order flow gives us a green line. When both 15-period SMAs are sloping down, the bears are firmly in control of the market. Again, only big money can do this, and we're going to get a red line. When those 15 periods are not in agreement, we're in control. And what we create is chaos and chop, and this is when we stand aside. And just remember one thing that's ultra important. Your goal as a day trader, and I ask traders in my trading room all the time, what's your number one goal as a day trader or a swing trader? And everyone almost inevitably says the goal is for us to get winners. But that is not true. The goal that we look to achieve is to avoid almost every loser. Every day I trade the markets in the morning, my equity curve rises or falls off the number of losers I get. I always get a lot of winners. And the worst traders in the world who start with $100,000 account are going to wind up with 1 ton of winners. What they cannot avoid are the losers. The professional traders are the ones that sidestep almost every loser. And that's our goal. And that's your mindset. So when you open your computer in the morning, your mindset is, I want a perfect low risk entry. I don't care if the trade, if I assess the trade as being a little bit too risky and it winds up going 15 bucks. If it doesn't set up and it was the potential for a loser off the right edge, you just let it go. I'm telling you that beautiful trades will fall in your lap every single day. Just wait for them. So here's that 15-period SMA heading down on the two higher multiples, and you've got to trade short. Now I use Unirenko, but it doesn't really make any difference whether we use time, tick, range, Renko, Unirenko. You've got to trade to the short side. If you don't, the likelihood of getting stopped out is super high. Now here's the line. And you see here, you've got both SMAs heading down. You can only trade short. Here, you got both SMAs heading up. You can only trade long. And it's really well exemplified in Unirenko, but I'm going to show you the examples, and I'm going to show you the actual platform on a time-based chart. Now, what I wanted to really point out here is that as we move up, you see these retail traders, they're counter trend trading. They're going short in an environment where big money has order flow angled to the upside, and all they're going to do is get stopped out. And maybe this was you before. Maybe you were top calling. Maybe you were deciding that divergence is going to give you a reversal or give you a pullback. It's not going to happen anymore. In this move up, the candles are not opaque, so you can't see the wicks inside them. But throughout this move up, you can see the wicks down here. There are sellers in this whole move. Then you get a little bit of a pullback, we run them right over. A little bit of a pullback, we run them right over. The fact is, these pullbacks are what put money in our pockets. We can't take money from the big institutions. They create the trend. If we go home with a fatter wallet because it's lined with more money, it's coming from the other small retail traders who simply are trading the old methodology of top calling and bottom calling and counter trend trading the trend. And we're going to beat them up almost every time. Now, Laguerre momentum is right here. Now, what is momentum on price? Now, I don't think that there are many traders that really have a good handle on it. Now, in real life, we know it's really basic to understand what momentum is. If a car is going around a racetrack at 150 miles an hour at a constant speed, momentum is constant. We can't calculate it because we don't know the weight of the car, other additional factors, but we do know one thing: momentum is not changing if the speed of the car is not changing. If the car speeds up, momentum rises. If the car slows down, momentum falls. But what is momentum in the markets? Well, if you split open the indicator, it shows you exactly what momentum is. Now, there's a whole host of oscillators that we could have used. We could have used relative strength, fast stochastic, slow stochastic, Williams K, the Arun oscillator, and there are probably a dozen oscillators out there that I don't even know about and I'm not mentioning. They're all basically the same except for the Laguerre. But what they're looking at and what runs them, and I'll talk a little bit more about the Laguerre in a second, is they're looking at the relationship between the close of the candle and the low. So as the close of the candle continually approaches the low of the candle, you're in an environment where you have intensifying selling pressure as the close squeezes further and further to the low. And that is tracked by the Laguerre. Now, the reason we use, so if that's momentum in the markets, it has nothing to do with the speed of price. It has to do with the intensification of buying or selling pressure. And that's really a powerful force and a powerful analysis. Now, all the other indicators were purposed. George Lane created the first one in 1963. He created stochastic. Later, it was dubbed fast stochastic when they made a slow one. He only traded divergent signals, and I don't know how he did back in 1963. And maybe he was extremely successful because it was at a time when small retail traders dominated. But the Laguerre was never made to track divergence. We've opened it up, we've changed its gamma factor, it's got multiple smoothing factors, and it simply tracks momentum really, really closely. It's a very accurate indicator, and it will rarely flash divergence. And when we see it, we don't even look for it. In fact, I don't even care about it. This divergence is a top calling and bottom calling signal, and we don't believe in them. So what we do is we simply look at both percent K lines. I call them momentum lines, but to simplify it, it's just the percent K lines. And we look at the two higher multiple charts. And when they're both sloping up, we know that on both higher time frames, buying pressure is intensifying. When they're both sloping down, we know that selling pressure is sequentially intensifying. Now, nothing can do that except big institutional money. You and I can never create that kind of an analysis. Now, when both momentum lines are not in agreement, that's us. We're just, again, creating chop, chaos, disarray, and then we're going to get the line yellow, and we're going to know to step aside and not trade. Let the other small retail traders duke it out. Let them trade money back and forth. Let them take losses. We're not going to be in the market. So here's that percent K line on the two higher multiple charts. And you have got to trade long. I don't care what kind of candle you're trading. This is a directional bias we're setting. Before we set a short bias based on order flow. Now we're setting a long bias based on momentum. If we don't trade long, we're going to get whomped. Now let's combine them. When we combine them, we create more specificity. And when we talk about specificity in mathematics, it simply means that we're going to get fewer setups, but the setups we get are going to have a high probability of becoming successful. So when we have red, we're going to take that short pivot. When we have green, we're going to take that long pivot. And the likelihood that this long pivot is going to go up is exceedingly high. But we're not done yet. We want to add more specificity because we don't want to take a loser. And we're going to look at a quant line. Now, I didn't have time to change the deck. So the quant line assessment that I'm projecting is going to be on a futures market. But we do it on each individual stock. And if we look at the E-mini, here's the correlative market assessment. Now on stocks, it's really I can't say the type of analysis it is because it's a word that's not quite it's not a great word to use out loud, but it's a real butt crunching analysis. On the futures market, it's a lot easier. Now, when the correlative market line is red, the E-mini is almost always going to fall. When it's green, it's almost always going to rise. In your minds, just substitute a stock. That's all. Now, what are we looking at? We're looking at 3 correlative markets to the E-mini. And we're doing it on a triple screen assessment. And we're looking at market structure. It's a very complex assessment. On the E-mini, it's the Dow, the Russell, and the NASDAQ. And when the triple screen assessment of the Dow is short, the Russell is short, and the NASDAQ is short, each individual assessments. This line is red, and whatever, in this particular case, will be a stock, you're going to trade short. When the Dow, Russell, and NASDAQ are up, in this case, it would be a stock and wouldn't be the Dow, Russell, and NASDAQ, we're going to go long on it. It's an extremely powerful assessment. And it took us a long time to arrive at the correlative markets on certain stocks. But if you believe in a neural net and that no financial instrument moves in isolation to any other financial instrument, every single stock has its correlatives. Now, it has to correlate at least 70% of the time either moving in the same direction or in the counter trend direction. Either one is fine, as long as it does it 70% of the time or greater. So now we're going to have 3 assessments. And if we don't have green, 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 or red, 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 we're not going to trade. When we get green, 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 up we go. Small retail trader, rest in peace. Rest in peace unfortunately in the cemetery of lost swing traders and day traders. We're going to run them over, take their money, and continue to the upside. Same thing when we're red, red, red. On the stock, we're taking it short. We're going to run over any small retail trader that tries to take it in the counter trend direction. Good luck to them, because they're not going anywhere. They're going to get run over and they're going to lose their money. And they're going to give their money to us, because we're the ones that are going to run them over along with the big institutions. Now, small retail traders can create these retracements. Happens all the time. Now, for me, based on my automated trade management strategy, I'm going to get knocked out of this trade. But I'm going to get knocked out with a profit. I'm going to go short right here and run everybody over here and take their money. These 3 candles will take me out. I'll have a nice profit. I'm going to run them over. This 1 candle won't take me out. I'm going to take this stock all the way down. Now, I wouldn't take this trade because technically the market is oversold. Now, an oscillator does not provide you with an oversold or overbought assessment. It's how many standard deviations away from mean price the market is gone. And that's an analysis. If you come aboard, I want you to know we're going to do a master class, because I want to give you the nuts and bolts. I want you to understand how the system works. But it's almost like, driving a car. There's so much under the hood that if I tried to squeeze it all into this webinar, we would be here for 3 hours, and you would get bored and go to sleep. But I want you to understand the fundamental principles that drive it. All the nuances, I will bring you up to speed. My last master class was 3.5 hours, and there are traders in this room who are in it, who know that I'm telling the truth. Now, the other thing that we need to take into account, and remember, we want to reduce the odds of taking a loser to as close to 0 as possible. Now, because my area of expertise is mathematical modeling, I will have accomplished my goal when the probability of getting a loser is 0. Obviously, that's not the case. You do take losers. They should be rare. But what I want you to understand is the mindset is that this is never a finished product, that we're always looking to make it better. Because in mathematical modeling, until you perfectly describe the movement of whatever independent variable you're looking at, you are not done. So one additional assessment that we have to do is look at the multi-chart direction that it's going. If we want to trade Google long, we need the 2 higher multiple charts to be long. If we want to trade Google short, we need those 2 higher multiples to be short. We want to look at, I don't want to say higher time frames, because you don't have to be trading a time-based chart. But we want to look at the assessment of those higher multiple charts. And we do. We have 3 down alignments: light pink, bisque, and dark pink. 3 up alignments: light blue, cyan, and dark green. The most powerful short alignment is dark pink. Most powerful up alignment is dark green. This is where you're going to get your low-hanging fruit trades. And the system is defining risk for you. Light pink is the weakest. Bisque is intermediate. Light blue is the weakest. Cyan is intermediate. You can take a trade on these colors with the understanding that your entry is riskier. So here's the background color. Now, it goes from light pink, which is weak, to dark pink, which is the strongest. Now, price action, I believe, has no value, but market structure has incredible value. And market structure we set up. It's the 50. Here's the exponential. Here's a 15 EMA of an EMA. It's a proprietary line. We want to know where price is vis-a-vis both these lines. That's market structure, and that's what the assessment is doing. And it's telling us we've got that strongest down alignment. And irrespective of what order flow, momentum, and the correlative markets tell us, we have to have that instrument aligned to the downside as well. And almost always when you get this alignment, you've got red, red, red below, but not 100% of the time. And here's your up alignment. And here I moved this through 3 different powers. Cyan is intermediate, dark green is the strongest, light blue is the weakest. In the master class, I will show you based on market structure, and I do it on paint. I kind of draw it in. I'm going to show you how the different market structural setups create these different background colors. And they're very, very important. Now, these candles themselves, doesn't matter whether these are minutes, whether these are hours, 15 minutes, dailies, weeklies. This is a time-independent assessment. So you don't have to ask, well, does it work good on a swing trading chart? Does it work good on a long-term trading chart? Does it work good on a 1 minute? It does not matter. When institutional money aligns, if it stays aligned for a long time and you trade a 15-minute candle, maybe you can stay in the trade for 2 or 3 days. I have 20 options winners in a row, and I am not kidding you. I have published the winners. I have sent them out. We got our 20th winner yesterday when we closed. What did we close yesterday, Rory? We closed Twitter yesterday. Twitter hit our profit target. I sent it out via text message. That was our 20th options trade in a row as a winner. How did I get 20 in a row? No gimmicks, no nonsense. I use this system to determine the direction, and I use unusual options activity. But if it does not comport with the technical assessment of this software, I will not take the trade. And as part of what I'm going to do, I'm going to teach you how to trade options. Now, I wanted to show you that we have a component of artificial intelligence. And this is really what takes the system, in my own opinion, and listen, it's my own humble opinion, because it's taken us literally a few years to create this. What we've created is now you have all these independent assessments. I just went over. I'm not going to flip through all these slides. Plus, there's some I just don't have time to tell you about. But what if we had an indicator that looked at every single assessment and gave you an entry when every single independent variable that we look at is in alignment? And it just so happens we do. Now, these are the inputs to this indicator. Here's slide 1. Here's slide 2. Here's slide 3. It's got about 100 inputs in order to track every single independent variable that's on the system. And now you're going to see when you put it together, it's a lot easier than you think. Now, I always waver whether to play a testimony for you. I'll play 45 seconds. So I won't bog you down. I only have a minute and a half, but I will. I'll play. I'll just play 45 seconds. And I'm going to skip her.
Mark also relies heavily on his software to confirm that the trade entry will work. Mark watches money flow, order flow, and momentum and stochastic that is done on multiple time frames, and it really works. I believe in what I've been taught. It works and has changed my life. One of the best months that I've ever had has been $51,000, and that's all been based on
And talking with Mark, the CEO of the company, just really helped me because they're not out here to scam you or get your money. They're out here to develop educated, professional traders who can consistently make money. That is what they're about, and it has been a really great experience.
So this guy is seriously like a day trading genius.
Money for the rich. Needless to say, it's a great tool for pinpointing exit and entry strategies for getting the best trade options possible. I'm now a full-time trader. Dedication is required during the learning process, but right line trading has made it easier. Mark and his team.
Okay, I'll stop there.
Whenever I have a
Now,
question,
this man here is a member of the Miami Chamber of Commerce. So these are real, honest testimonials, and you just had to endure 30 seconds of them. Now, the entry price is exact, the exit price is exact, all the targets are pre-configured. Now, I'm going to skip this slide because what I want to do is show you a trade I took. Now, in the live trading room in the morning, if you come aboard, I trade futures, but I do what's called, you're also going to join me in the battle room. And in the battle room, we do stocks and options. But I wanted to show you a trade I took yesterday in the markets. So this is an old trade. This is yesterday's trade.
Order submitted.
Sell it down close. No, I just want you to see that all my targets and stops are all projected. We have tremendous clarity. Now, the first two lines are the correlative markets. The second two lines are the Ligier broken up. And there's the background color that I talked about. Bisque is a little riskier. That dark pink is the better color. But there's even a line on here I didn't even discuss. It's called our trend line. And it's taken into account by what we call our revolutions entry off the artificial intelligence that we use.
Order filled. Target filled.
Let's go. It's a 24 points, 25 points. That's over 100 ticks already. 30 points. You could.
Stop filled.
All right. Now here we are. I'll just hold it there. We made about 100 ticks on this trade. And you see this line here? I didn't even discuss it. But what that is a measure of chop and momentum and another very, very complex assessment that I'm going to go over in the master class. I told you, I just don't want to create a webinar that lasts for 3 or 4 hours. And honestly, I could easily do that. But I want to trade the pink background, the 50s down, the 15s down. That's our RL trend line, which I didn't mention. Here's our C2 indicator, which is really powerful. You get this in an environment where chop is falling and momentum is rising. So in a rising, when momentum is rising, now here momentum, we could say momentum is falling, but what I mean to say is that momentum is intensifying, whether it's in the upward direction or the downward direction. You get this. So this is a measure of falling chop and increasing power in momentum as a separate assessment besides the years. And when it kicks in, boy, see this area of support, I just let price go right through it. And that was the end. I took this trade at 9:34 in the morning. We made just under $600 on it, and we were done. I closed up and we were finished. I think this is the same chart. I don't know why it came up twice. Now I'm going to just show you some trades. Now that's the indicator. It's only going to come up when the trade meets every single definition. Now I did not put the C2 into this chart because I was not going to discuss it with you. I didn't want to confuse you, but it's around, and I think I have it on some of the charts. Oh, it is here. You know what it is? It's just hugging price so tightly. You see it here? You can't see it, but there's the up and there's the move up. See how order flow? Now order flow is reflected in the candle halo, and order flow changed color and you're out of the trade. You made 1065 on Costco. You only made 12% on a weekly option. Don't ask me why it was so low, but maybe it was towards the end of the expiration. Not a big trade, but we'll take 12%. Here's Amazon, perfect entry. And you have to have separation between the trend and the 15. That's the AI or the revolution's entry. You stay in the trade, order flow stays green, and as soon as order flow changes, the candle halo, you're out of the trade. It went up $44.96, 41% on the weekly. This is Lemonade, and it's really been on my ticker. It went up 2 days this week, it went up over 15 bucks. Today it's down 15 bucks. It's just got an amazing amount of volatility. We caught it to the upside, 1652, 102% on the weekly. Now, I'm going to show you the scanner because you're going to wonder, well, how do you get these signals? Well, I'm going to show you how you do. It goes all the way up. We're out on the candle halo. Perfect. We know the exit entry and we know the exit. This is Fastly. And this has been a stock that it hasn't tortured me, but it's a stock I like to trade, and sometimes it gives me a heart attack. And but it's always worked out well for me with Fastly, and we just closed it for a really nice winner. I sold a put spread, took a net credit. We didn't get 100% of our net credit. We got a nice chunk of it on a big move up. There was a rumor that Fastly was going to merge with Cisco. It sent it flying. This isn't dead, but we got the revolutions, up it went. We're out on the change in order flow. That's an 84%er. That was a good one. Now, MindMed, now I just want to show you that you can trade really thinly traded stocks. Now, this is not a penny stock anymore, and it's attracted institutional buyers. Now, I started looking at MindMed when it was 40 cents and recommended it out at 40 cents. It's now trading at $2.35. So we took this trade a while ago, but there was the entry. Up we went. That's 36% on MindMed that day. This has been described as the Tesla of psychedelic medicine, of companies that are working with psychedelic medicines. They have 2 psilocybin-based medicines in phase 2 trials. And this company someday could be worth a fortune if one of these medicines gets approved. It came on my radar at 40 cents. It's now approaching $3. And I talked a lot of people in the trading room into taking this trade, into taking this. Now, these are the trades I talk about in the battle room. Now, here's Solo Electronica Mechanica. And you got multiple signals that just dogged this trade all the way up. Only went up 9%, but I mean, that is not a small move in a stock. I just showed it again because we have multiple trades on Solo, and the other one was a 9%. Here was a 10%, and we're just getting multiple signals that are comporting with entries, and it's just dogging the system, the entries all the way up. Now here's Veru, $2.44, 47% on the weekly. Entry is right here, out on the candle halo change. Here is Quantum. Hold on a minute. They make, I believe it's a new battery. And I wish I could tell you I have a great in-depth knowledge of everything I trade, but since I'm taking this totally off of the technicals, sometimes I just don't. It's QuantumScape Corporation, and it has made enormous moves, and it's just come on our radar because it's come up off our scanner, and it has, what does it do here? That's what I thought. It makes lithium solid state batteries, and it's supposedly making the potentially numero uno battery that is going to be used in the world on electric vehicles. It's a $25 move, 51% on this move. Now, here's how our equity curve to date, trading options, $180,000. Now, I take every trade I recommend in my own portfolio on Thinkorswim, and I have to tell you, I am up a freaking ton of money trading options. I have 20 winners in a row. I am in equity. I am in an all-time equity high. Now, in the trading room on futures, we try to hit at least $1,000 a week, $4,000 a month to $5,000 a month. Remember, you only have a tiny account. You can trade with $2,000 or $3,000, and if you can make $4,000 to $5,000 a month, that's essentially 200% per month. Nothing can give you that kind of a return. This is from 9/1 to 9/22. Now, I believe it's the most powerful software and trading methodology available to the small retail trader. Obviously, I'm a little bit biased since I created it. I didn't program it, Sergio did. And he's our guru in computer science and program. He has a master's in that. Now, if you want to trade the same old stuff, I kind of put this in there because it's a little bit comical, but it's also unfortunately the truth. And that is, if you trade the old way, you're gonna go the route of all the old traders. And all these old systems are built on price action, indicators off your trading chart, calling tops and bottoms, trading divergence signals, or trading gimmicks. And there is no gimmick in the stock market. I mean, the institutional traders know everything. And this, in my opinion, is the way to make money. Now, it's easy to learn. The workspace is very intuitive. If you come aboard, you're going to get over 3 hours. And if you come into the battle room, you're going to get a year. It's perfect for beginners, any account size. Now, I have it set up for futures, forex, stocks, and options. It's really, this platform is for stocks and options. Now, here's what we're doing. We're going to offer only the first 10 traders who come aboard 3 additional pieces of software, which in my opinion are very valuable. If you put your name and phone number into the chat, Rory will give you a call, answer any questions that you have, and you'll lock in those 3 pieces of software. Even if you're not one of the first 10 buyers, you've got a lock on it, and you're obligated to nothing. And we're not telemarketers, believe me. We're going to call you once to answer any questions you have, and if you don't want to come aboard, you will never hear from us again, because we're not going to call you repeatedly. We just don't work that way. We don't have a phone room, and Rory is swamped. And that's why we're asking for your permission to call you. And if you don't give us your permission, we're never going to call you. So if you want to lock in that deal, just you put your name and phone number in, and you'll get those 3 additional software packages. That's our phone number if you want to call us. But now here's the first that you're going to get. Well, I'm going to put the real analyzer right over the slide. Now, for some reason, I'm not getting some data on on Dow, on IBM, and I can have Sergio look at it. Because if you look at the right, you see it's got the daily volume of the instrument. We're getting the volume of the Dow, of Dow Chemical, but for some reason, we're just not getting any data. And I can't tell you why. I'm not going to worry about that right now. But you can see, you can look at as many stocks as you want. You can look at as many time frames as you want. You can configure this in range, Renko, Unirenko, anything that you like. I put up a 2-minute, a 5-minute, a 15-minute, a 1 hour. This is doing the work for you. If you're trading a 2-minute, you have a Roku buy. If you're trading a 5-minute, you have a Roku buy. But you don't need green across the board. Caterpillar, you have a buy on a 2-minute. On Disney, you got to buy all the way across the board. And look at the volume on Disney. 65 million shares crossing. So what you need to do is get on that stock as soon as the green flashes, not after it's been flashing for a long period of time. Because this is telling you that everything is aligned and it's staying aligned. So that's one of the additions that you're going to get. It really makes trading a lot easier. Now, once a week in the battle room, I'm going to give you my hit list of stocks, the ones I have on my scanner, and you can copy that if you're worried about if you don't have it. Now, you also get 1 year in the battle room. Now, what I found is a lot of software that you buy, but it doesn't come with enough education. If you're going to get a master class, doesn't matter whether you're one of the first 10 or you're the 25th. Everyone's going to get that master class. But if you're one of the first 10, or you put your name and number in the chat, or your name in Skype if you're overseas, you're going to be in the battle room with me for 1 year. Every week we trade stocks and options, and let me tell you, we hit it. Now it's scheduled for an hour. Last Tuesday, they're scheduled for Tuesdays. I did the battle room for 2 hours and 45 minutes. I've never had a battle room run under 2.5 hours. It's a really intense educational session. And you're going to be in there for a whole year. And it's not going to take you a year to trade the software, but when you become the best violin player in the world, you still practice 20 to 30 hours a week. You can never get too good. And even when you're making really good money, you can make better money. So you're going to stay with me for a whole year, and we're just going to continue to move forward with the software and the system. Now, you're also going to get 1 free month in the live trading. And we had a study that was published in Traders World. We're in the top 10 rooms for transparency, proven track record, likelihood of assisting traders with online support. And we are superlative in answering your questions. Now, everyone's going to get a rapid results quick start guide. It doesn't matter whether you're the 8th to purchase or you're the 20th to purchase. Now, the VIP support that we offer in the office is, I think, really, really good. I mean, I listen to a lot of other people's webinars. I call a lot of other people. And often, I would say 75 to 80% of the time, I get an answering service or I get voicemail. If I ask a question about the software, I never get a return. If I ask a buying question, they get right back to me. And the people who answer the phone have absolutely no clue about trading. They simply farmed out the calls to some service in in Korea or the Philippines, or they just don't bother with customer service. For us, it's really an integral part of the program. You're to get me, Rory, Sergio, and Sergio's going to do a white glove installation on the software. It's obviously pretty complex if you include all the inputs that go into templates on the Revolution signal, and understand that each kind of stock that you trade requires a different range of inputs. It's a very complex system that we've broken down to make it easy for you to trade. Now, if I can get the next slide up. Now, everyone, like I said, is going to get that master trading course. And we're going to do repeated courses almost every week, aside from the battle room. After we trade in the morning, I step aside. The room is done. We've hit our profit target. Our profit target, we like to make about $500 to $600 a day. We stop, and then at least one day, I go into trading something. And it's really what the majority of traders in the room want. Now, this week, everyone wanted to trade Forex. I taught them how to do that. A lot of times it's going to be stocks and options. That is by far and away the most popular. But we've been looking at cryptos, and we've been looking at all sorts of other things. Now, I have to say, I do consider myself to be a really, really good options trader. You don't get 20 options winning trades in a row. I have a couple that are triple digits. And unlike the gurus who are throwing out triple digit winners like they were water, it's tough to get a triple digit winner, because when you move very deep into the money on an option, you lose your gamma and you lose your leverage, and your delta starts to move in lockstep with the price of the underlying financial instrument. It's hard, very difficult to get a triple digit winner. And we've gotten a few in those 20 winners. We've got a lot that are very close to 100%. And sitting open in the portfolio are still a bunch of winners that haven't closed yet. Now, it's cliche, but trading success does equal financial freedom, and we're coming to the end. You do work from home, you have no boss, you have no commute. It's nice to be in the trading room because you have a little company, and there's a lot of solitude in this, and solitude sometimes leads to over trading. So it's nice to be. You're going to be with a community of traders in the trading room that are all very supportive. Basically, our philosophy is we're in this massive universe of small retail traders. Again, it's tens of thousands, maybe, and maybe hundreds of thousands. I don't know. I mean, worldwide, it's an enormous number of traders. Well, we're a small community of traders, and we're very supportive of each other. Everybody in the room tries to help everybody else. So from the best suggestions I've ever gotten to improve the software have come from traders in the room. I take all suggestions, and everybody puts their profit loss in the room. I mean, we've got a very, very bunch of very supportive people in there. Now, I just wanted to show you me. Those are two of my son's friends. That's my son. I'm a single dad. I'm in South Florida. I have no family here. I raised this boy by myself, as everybody in the office knows. I have zero help. Sometimes Rory will help me. And I'm just kidding, Rory. But I do his laundry. I make his food. I take him to school in the morning. And it's this type of endeavor that gives me the latitude to do that. And that's what makes it such a blessing. That as a single father, I can be a really, really good dad to this boy. And that is an unbelievable blessing for me. Now, we just gotten out of Chinese buffet, and they love Chinese buffet. And that's why they're so happy. And I don't know how my son got a lay at a Chinese buffet, but somehow he did. Now, here's the itemization. I'm not even going to bother and waste your time with it. It's $13.97, and it's a lifetime license. Now, starting January 1st, we're not giving out any more lifetime licenses. We're going to put it on a yearly basis. This is going to maybe your I would be willing to bet 100%, almost 100%. This will be your last opportunity to come aboard, and basically you're never going to pay us another dime for the software. Now that includes upgrades and add-ons. If we make a better system, and we're working on better indicators, I'm telling you, we work constantly to improve it. I think it's a stellar system, but it can always be made better. If I didn't think so, I wouldn't have my grounds, my feet in mathematical modeling. Now, if you're one of the first 10, you get the market scanner, you get 1 year in the battle room, 1 month in the live trading room, and everybody is, as gratitude for staying to the end, is going to get my ebook. It's called the Trader's Aptitude Accelerator. As I said, it's not a throwaway. And what I wanted to do was show you a live chart. Now, this is a live chart on Roku. This is exactly how the software looks. Now, this I put in here. I can move that around. Look, and I just wanted to use that to show you the entry right here. But I can't move this triangle, and I can't move anything else on here. That's all software generated. And you can see that blue. We're staying in the trade. And that's why I did not create a fixed amount of profit. You could have taken your trade out anytime you wanted based on your automated trade management strategy, or based upon how your underlying option is doing, or if you have enough money and you actually bought the stock, that's up to you. But for us, the trade is not terminated yet. We are still rolling. And even though we have a sag here, and this goes yellow, it's still neutral. It has never gone red. And as long as it's neutral, these are the things we're going to go over in the master class. And this is the gear off our trading chart. I said, but we never look at anything in our trading chart, but we do have to look at momentum on our trading chart. It does have predictive value. This is the multi-time frame gear, or the triple screen assessment. And these are 2 triple screen assessments of the correlative markets to Roku. And they're both heading up. And these are simply on different time frames. So I open it up, I go to the quant. One's a 6-minute and one's a 4-minute. You can open it up and show you that that's what it is. And on the multi-time frame of gear, we're looking at a 6-minute. And it's got a lot of inputs. Oh, this is the revolutions. This is our AI. So that's the software, and that's actually a chart. I wanted to show it to you just to see. Up here, total volume. Down here, volume of shares crossing per minute of time. It really gives you all the information you need to take a great trade. And that's what I'm going to teach you in the master class. So let me answer any questions that you might have. Hang on one second. Hold on. I've got to scroll up here. Oh, thank you, Rian. Hey. No, this is all stocks. Hey, Gregory. The system itself, I just want to show it to you. It's called the institutional edge trading system. And the reason we call it the institutional edge is because we use institutional money to create the direction that we're going to trade. And there's no way that you can create this kind of alignment without institutional money being present. Small retail traders in no way could ever do this. There's just too much, and there's an enormous amount of buying pressure here on Roku. We can't do that. And that's why I call it the institutional edge. They only have one 15-minute SMA. Don't worry about that. You just give us a call and we'll help you with that. Okay? Just call us, Jim. Hey, John. How many contracts do I trade, John? You know, very few. I would say between 2 and 4. I always trade an even number. So because sometimes I'll take half off. So if I trade 4, I can take off 2. And if I trade 2, I can take off 1. I don't trade 10 contracts on a given position. But what we do, John, and I just don't have the time and the ability right now, is I believe that an options trader should create a portfolio just like a stock trader. I mean, what you tend to get from these services is they give you their one option trade that's going to make you a 10,000%. What we have is about 15 or 16 open positions. So if I'm trading 2 to 4 contracts per position, and let's say I'm trading 4 and I have 15 open positions, I have a lot of money out there. But we have a balanced portfolio, and I have sectors that I look for, which I'm going to go into in great detail in the battle room. In fact, I spent a lot of time on that. Like right now, I like internet retail, and we're in JD.com, Chinese. We're in Chewy. That's the #1. And Chewy's up huge today. That's the #1 internet retailer for pet food. There are certain sectors. I'm in infrastructure. We're in CSX. That's a railroad. We're in another railroad, Louisiana Pacific. Louisiana Pacific, in a really bad day today, is doing, at least last time I looked, was doing extremely well. I mean, do you know that we're up money today in the options portfolio? Even though we're having a day that's kind of mixed. The Dow's up 45, S&P's down 7, NASDAQ's down 48. Now I'm on a 15-minute delay because I'm looking at my phone. We have a very, very balanced portfolio. This week we closed out Hostess Twinkies, which I always joke about. We made really nice money off a Hostess brand. And why did I buy it? Unusual options activity. Do you know that Chewy is up $6.39? It's up 8%. And I'm almost close to closing it because we have a $70, $85 call. I looked for 15 bucks on a $70 stock. And the reason I did, because of the way I configure options. It's very unique. I'm going to teach you how to do it. We're on JD.com, we're up. That's another internet retailer. And our railroads are both up big. Louisiana Pacific is up 62 cents. CSX is up 51%. We closed Twitter out. I'm really big on online gaming. That's why I bought Sony. Sony is up. What can I say? I know the sectors I'm looking for, and everything I do is based on unusual options activity. I'm going to teach you how to interpret it and on how to take options. I'm telling you, if you know how to trade options the right way, you can really make a lot of money. There's just very few people that stick to the basics and trade you and teach you the right way. And I really mean that from my heart. I mean, if you use unusual options activity with the right technicals in the sectors that you believe are hot, you are going to clean up. Hey, Gregory, how did you find? Like, that's how I found him, Gregory. And I don't have also the time either. But what I do is, I've subscribed to 2 data feeds, Options Monster and Benzinga, and all the unusual options activity crosses the ticker. At night, I sit down. I probably go through 200 to 250 signals. And it takes me about 2 hours a night. Sometimes I sit here in the late afternoon into it. There's no fast way to do it. And I'll tell you one other thing, even though it's kind of an aside from this webinar. There's no scanner that can do it either. Because unusual options activity comes in different configurations, has different meaning. The number of contracts crossed has to be greater than open interest. There's a whole different, and you have to visualize it. There's no scanner. A few people sell you these scanners and they're like $2,000, $2,500. And you're not going to be able to get that off of a scanner. You need if there was, I'd buy a scanner. If it could save me 2 hours to 2.5 hours a day in time and it worked, I would buy it. But they just don't work. And that's how you have to do it. And you're going to be able to get a great feel for what unusual options activity works for you. Then you got to go to the software and it's got to technically, set up for you. If it doesn't set up technically, ignore it. And when they all come into play, and believe me, you're going to get plenty that do. The trouble I have is I wind up with too many candidates and I don't know what to do with all the ones that I have. That's why I think we have 15 or 16 open positions, even though we've closed out 20. And Sunday night, I'll probably recommend 3 more positions because I think we're heavy duty bullish going into the first of the year. Hey, Noel, thank you for your number. This program, Accentra, is really pretty much programmed for stocks and futures, but for stocks and options, but it can be used on futures and Forex if you want to trade it. Hey, thank you, Biz. Thank you for your number. Hey, Mitchell. I'm sorry, Mitch. Okay. We have all the recordings, Jim. You just got to call in. Byrne, thank you. David, thank you for your number. Just call us, Jim. How easy is it to find a trade like Roku? The scanner would find that for you, Biz. How many false entries does it have? I mean, honestly, if you trade this very conservatively, it's easy for you to have a positive predictive value or win percentage that's 85% or greater. Just don't take any risk. And when I say risk, I'll show you just really quickly what I mean. Take the candle right off a support. Every now and then you'll get a candle that's a little bit too far. Now, if it's too far off support, there's a parameter we have as to how far off support we're allowed to get a signal. But every now and then, I just don't like it. And here's the other thing that makes this so great. The green color just kicked in. So the alignment just occurred. If we got this revolution signal here, well, we couldn't. It won't signal unless you have green background. But you could get the signal all the way over here. Now, in this particular case, that wouldn't have mattered. But once the trade starts to evolve through, I just always get a little more concerned that the trade is maturing too far. And I'm moving too far towards the end. Now, in this particular case, obviously it wouldn't have made a difference, but you would never get a signal here because the trend line has sagged. Here, the trend line is above the 15, which you need. But I'm just giving you, different reasons, and we're going to go over all of this anyway. But if you stay very conservative with the mindset that your number one goal is to avoid losers, you're gonna hit that 85% or more a percentage. And obviously 20 options trade winners in a row or 20 stock trade winners in a row. So you really have to do great directional calling. And all these people that tell you make money if it moves in either direction, sure, you can create a straddle or a strangle or whatever you want to do, but I mean, those are ridiculous to trade. Whoops. Hey, Bern. Okay, which I bought. The format of the bottom. Should I still with this program, or how can we? Just give us a call about that, Bern. That's all. Okay. And we'll take care of that. No, I jumped it, so I skipped somebody. I'm in your Sunday options updates. Looking good. Thank you, Biz. Hey, look, I'm very hopeful on all those positions. Listen, the portfolio overall is looking terrific. There's a couple of positions I'm not crazy about how they're moving, but we're going to hang in those. Okay, hey, Bern, I just answered you. You know what, John? I don't know much about the TC200 scanner, even though I've heard about it. I just don't think on unusual options activity, you're going to get much of it, if that's what it is. And I don't think now this scanner is formatted for this system. So I can't compare our scanner to any other scanner. This is looking at every single independent variable for a trade, just like our artificial intelligence is, which is inside the indicators, is called the revolutions entry right here. And you see the 2 minute, we have this all set times 3, 6, 6, 6, 6, and automatically in the default system, it looks at the 18. You just have to, or we have to, and we'll send it to you all configured, put this in. Here's sensitivity, line inputs. Sergio will do this all for you. Market opens at 9:30, closes at 1600 hours Eastern time. These are all default settings, and we'll set these all up for you. Now let me just go to the end here. Okay, great, Bern. Would love to have your call. So that's it. Let me just give you our number one more time. If you'd like to give us a call, we'll be here all day. And I appreciate many of you who have given us your name and number. Like I said, it obligates you to nothing. Hopefully you'll come aboard, trade with me Monday morning, and we'll make some nice bucks. And we'll start lining your wallet, fattening your account. And my goal, and I kid you not, is if you pay $13.97, is that $13.97 is the least you'll make on Monday. I mean, I'm going to work for that really hard. Is that everybody gets their money back in their first week. Now, remember, you can piggyback my trades, and my trades are usually very, very good. I mean, I've been sitting in front of the computer for 10 years, and I finally gotten to a point where I am really, really on point. So you can make money right off the bat and know very little about what we're doing, but your learning curve will really go up fast. Okay? Oh, I'm sorry. Let me mention that, Biz. The indicators only can project on NinjaTrader 8, but if you have Thinkorswim, Interactive Brokers, Owanda, eSignal, E-Trade, and a whole host of others, Sergio will take what's called an API, which is built into your brokerage platform, and it will come over and run NinjaTrader 8. So we'll download a demo. It'll cost you nothing, and you will take the entries and signals off of 8 onto your brokerage platform. I use Thinkorswim. I opened up my account with TD Waterhouse in 1997, and then they merged with Ameritrade and became TD Ameritrade. I also have an account with First Trade, which I think has a very, very nice options tool. But ultimately, I always go to the Thinkorswim options tool. It's really excellent. If you want, I will be more than happy to teach you how to use it and show you how to configure an options trade off of it. It's it's really good. But so your worst case scenario is that you need to open up a NinjaTrader account. Now you can do that with just $100, and we will help you. We have a broker that we use. You'll have it open in 48 hours with $100. And the data that you'll need to drive it will cost you $12 a month. So that's basically the cost of doing business. So that's your worst case scenario. Your best case scenario is you have a broker that allows the API to come over. And we have a lot of traders on Thinkorswim, a lot on Interactive Brokers. And it gives you all the data off the program. We do find it's best to trade options with, I have E-Trade now being, hey, listen, Biz, everybody had, I don't know that much about E-Trade. I'm sure it's a terrific platform. But E-Trade you can use, and we can bring your API over to run, and so you don't need to do anything. All you need to do, and Sergio will do it, he'll download a demo for you, and all of a sudden we'll bring NinjaTrader to life. Now you're going to have to trade on E-Trade because you're just looking at a live demo of NT8, but you don't have to change your broker or move off of that account. You stay with your account. Sure, I understand. A lot of people are wed to their broker, so there's no problem with that. Honestly. And that's why, you really don't care who you use. Well, it just so happens you're with a broker who you can stay with. If you want to just work on NinjaTrader, we can get you tremendously. Well, NinjaTrader is not a great platform for stocks. I use Thinkorswim, and if I didn't have all these slides up, I would open up my Thinkorswim for you, but I don't want to take more time. Like I said, these are all the things we'll do in the masterclass, and and really what we do is we do a first masterclass, which usually runs about 3 hours, and it's really not even sufficient time and then we'll do another master class, and hopefully you'll be in the battle room with me, and we're just going to continue to pound the information out over the course of a whole year. And just remember, no matter how good of a trader you are, I mean, I've been at this for almost 20 years. I've been sitting in front of this computer and this chair for 10. I know always I can be better. I know that every week I make mistakes. Every week I take at least a couple of rotten trades that make my belly ache. So I always know that I can become a better trader. Even though I'm a profitable trader, I can still be a better trader. That is my, see, Schwab, okay, it's a really good options chain. And you know what? We can't bring Schwab over, Paul, but for $100, you can have NinjaTrader up and running on NinjaTrader. It's really, really cheap. And your data feed is really, really cheap as well. And you can just stay with Schwab. I mean, all these platforms have great, have great configuration tools. I mean, I've been working with Thinkorswim for so many years. I just kind of feel like it's part of, you know, the right lobe of my brain. I've grown a little tumor in there. The battle room is a lot more macho sounding than what you used to call it. Yeah, well, you know, they're not really coaching calls, Bob. I mean, I call it the battle room really because we really are doing battle. I mean, every day when we open up every day when we open up the platform, we're fighting all the other small retail traders. And although we're not fighting with, you know, with guns and swords, we have a lot at stake. I mean, God forbid it's our lives, but it's our livelihood that's at stake, and it's our money that's at stake, and that's a big deal. So it really is. It's really a battle that we have to win. And I want everybody in my trading family to be successful. Even if you just can't get it right, just piggyback with me. Hey, Bob. Oh, okay. Hey, Paul. I have NinjaTrader for futures, Schwab. That's Paul. That's the best. Yeah, that you've been with Schwab. I mean, Ninja for futures and Schwab for stocks and options is perfect, and that's going to work for you great if you come aboard and you choose to. You'll get you're going to get a lot of my options trades, and I mean, I pretty much give them out in the battle room. I mean, it's a separate service, which for you guys is $79 a month. I don't want to sell it. I hear, but your first month is on a one, you know, it's super cheap. You're already a customer. Thank you, Paul. And I've got great stocks on my radar for Sunday night. I've got them all lined up in my platform. So listen, everyone, thank you so much for giving me your time. I hope we come out on Monday and kick butt together. But if not, I wish you the best. Stay safe. Have a really, really wonderful weekend. Enjoy yourself. Stay away from the COVID if it's out there. And let's kick some butt. And even if you don't come aboard, you're more than welcome to give us a call. I'm very accessible. If you talk to Rory, he'll be more than happy to switch you over to me. I'll be more than happy to help you with a trading question. I mean, if you're stuck on something, you want an answer, if I know it, I'll give it to you. You don't even have to be a member of our service. I want the small guys I come in contact with to make loot. So have a great weekend, everyone, and best of health, happiness, and wealth. Take care. Bye-bye.